Hey there, Hector Daville here. I am recording today the euro against the Australian dollar because it seems like an interesting setup, at least as per the London Open breakout strategy. Okay, I haven't taken any trade yet, guys. I am not in the market yet, but it seems like we may get a London Open breakout setup. Okay, let's analyze first of all what we've been seeing throughout the last few days. We can clearly identify a downtrending price action as per the last 2, 3, 4 days, basically an intra-week trending price action, which is always a nice thing to see as far as the London Open breakout strategy. Okay, we can clearly identify those lower swing highs and lower swing lows. So in a nutshell, there's a downtrend in there. Remember that the London Open breakout strategy is always meant to be traded within trending market conditions. Alright, at least within intra-week trending market conditions. So, now that we've determined that we have an intra-week trend in place, it's now time to analyze what's been going on through the Tokyo session. Okay? As per the last few hours, we've seen that, Tokyo basically has been trending flat, all right, in a very tight range. Okay, that's another thing that you always want to see: a tight and flat Tokyo range. All right, you see how I can mark the Tokyo range low and the Tokyo range high as well, and it seems rather tight, okay, rather horizontal, and like I say, that's always a nice thing to see because price gathers momentum before the London Open the London market opens up, and therefore once the volatility kicks in the market, therefore seeing those beautiful acceleration moves, regardless of whether it's to the downside or to the upside. I obviously don't know which direction the price is going to break towards, but as long as price remains compressed, once the volume kicks in at the London market opening time, we usually see a momentum swing to either direction, and that's exactly what I am going to try to profit from. Alright, so recapping a little bit: downtrending price action, flat and horizontal and tight Tokyo range, and moreover, another requirement you want to see as far as the London Open breakout strategy, that range is taking place at the extreme end of the previous day's range. This obviously being the previous day's range, right? Do you see how the Tokyo range today is taking place at the very extreme end? In this case, at the lower end of the previous day's range. All right. As a general rule of the thumb, you want the Tokyo range to take place at the lower end of the previous day's range or at the upper end of the previous day's range. At no rate you want to trade or you want to search for a London Open breakout setup where the Tokyo range takes place in the middle of the previous day's range. Alright, that's a no-go. You don't want to trade that kind of setups because you want to trade either a continuation move or a reversal, and by definition, in order to take a continuation or a reversal move, you need price to be trading at an extreme level, right? Not in the middle of nowhere, okay? Not in a no man's land. That cannot possibly indicate any type of continuation of or reversal, right? So, so far so good. We have the three requirements in place. Again, intra-week trending price action, tight and horizontal Tokyo range, and taking place at the extreme of the previous day's range. So far so good from the setup chart, okay, meaning from the 1 hour time frame. Let me show you now the daily time frame. Actually, let me zoom in just so you guys have a clearer picture. There we go. I think this is rather clear there. So this is the daily time frame. As you guys know, I always like to confirm or to double check the long-term charts, even if I am looking to trade or to take an intraday trade. All right, it's very important before you take an intraday trade that you zoom out into the long-term charts, let's say the daily, the weekly, even the monthly, and draw the most significant levels of long-term support and resistance, just to make sure that your intraday trade is not about to crush or to, face a long-term level of support and resistance. Basically, what I am trying to say is that you don't want to take an intraday trade that goes against a long-term level of support and resistance. All right? That's very important, guys. It takes a minute or two, and it can totally keep you away from a number of issues and problems. All right. So let's imagine. Oops, sorry about that, guys. Let me move forward again. There we are. So let's imagine that I do get, as the London market opens up, let's imagine that I get a breakout to the downside. So I would have to confirm that I am not about to take that short trade against a against a long-term level of support. Where do I have the support here? Well, obviously, this is the most significant support level with this obvious double bottom there, right, guys? You obviously see that double bottom in my screen around the 2150 area. I repeat, 121.50, double bottom, and therefore a significant level of long-term support. Now, even if I get my short trade in there, I am totally okay really to take that trade, because this double bottom comes way below my my entry area, right? If I am to take that intraday trade, this would be more or less the area where that intraday trade would develop. All right, between the 123.00 and the 122.50 area. All right, so I've got plenty of room here, plenty of breathing room to squeeze some intraday profits in there. All right, so even though I do have long-term support ahead of any short trade that I may take from an intraday point of view, like I say, there is plenty of distance enough for me to take, that intraday trade. Okay, at no rate this intraday trade would come all the way down here. That's just impossible for an intraday trade. Okay, so from a support point of view, I am okay. Now, what about, what if the breakout took place to the upside? What if I was to take a long intraday trade? Well, then I would have to draw the levels of long-term resistance. Where do I have the resistance here? Well, obviously that's the most significant levels, or actually the most recent levels of resistance. All right, there is another level of resistance in there with this triple top. Okay, three tops, three consecutive, or well, not really consecutive, but almost consecutive candles topping out at this specific level, just above the 124.50. However, I also have another swing top in there, another resistance level around there, the 124.00 level. However, I'm not really going to take into consideration these levels, because price has already broken all those levels twice. Firstly, it broke them to the upside, and then it broke them to the downside. Do you see that, guys? You may have noticed from all the previous videos that, as far as I am concerned, once a specific level is broken twice, all right, twice in a row, it kind of loses its power. At least as far as I am concerned, that's been my experience, guys. Whenever a specific level of support and resistance is broken twice, it kind of loses its its whole power. Let's imagine that that level had been broken to the upside, and then price was to kind of rebound back down, and let's say that current market price was somewhere around there, and well, instead of looking to take my trade around this section here of the chart, I was to take my trade somewhere in there. Well, I would be very hesitant to search for a short trade, because at this price level I would have that long-term level of former resistance now perhaps working as support as as I was to take my short trade from an intraday point of view. Okay, what does that mean? Well, it means that basically I would be taking a short trade against long-term resistance. That's a very bad idea, guys. As I always say, you don't want to sell against support, you don't want to buy against resistance. If I took any intraday trade, any short intraday trade around that area, I would be selling against long-term support, and that's something that I don't want to do. So, what am I getting down to? Well, I'm getting down to the fact that if this trade was to take place in there, I would not take any short trade. I would be okay to take a long trade though, right? But certainly not a short trade. And even if it was a long trade, that would be rather tricky because I would still have that swing high just above my long entry point, right? So this is not an area where I would certainly feel comfortable to take a trade from an intraday point of view. However, at this point there, that's a much better location in the chart. Like I say, that former level of resistance, even this one here, has been broken once, and then it has been broken once again, and therefore, as far as I am concerned, this level, both this one and this one, are basically valid no longer. So from a long-term perspective, I am only to mind this double bottom, that level of support, and this level of resistance. Since my trade is taking place at this section of the chart, there is plenty of room both to the upside and to the downside to squeeze profits, intraday profits, before hitting or before coming anywhere about any of those levels. Now, there is one little concern that I am facing on this specific setup, and that's Fibonacci retracements. If I take this swing high and I draw my Fibonacci retracements, I've already done this. We've already broken the 61% Fibonacci retracement, but we have the 76 Fibonacci retracement coming somewhere down there, around the 122.50 area. All right. So even though the average daily range takes me all the way down here to around 122.40, I'm not really looking to overstretch my trade all the way down there. Not only I don't like to, from a general point of view, as a general rule of the thumb, I don't really like to stretch my intraday profits all the way down to the average daily range. I think that's overly aggressive. I like to be a little bit more conservative with my trades. So not only I don't like to overstretch my intraday profits that far. Moreover, I have the 122.50 round number in there, and like I say, moreover, the 76 Fibonacci retracements come around that level as well. All right, so I'm gonna play it safe, and I'm gonna exit the trade at around 122.60 if the breakout takes place to the downside. Obviously, if the breakout takes to the upside, there is no further resistance until this swing point there, so I can be a little bit more aggressive with my targets and perhaps try to stretch out my target a little farther up. So just to cut it short, if I get a short trade, I'm going to be more conservative with my targets. I'm only going to be looking to squeeze maybe 40 pips out of this trade all the way down. I'm going to be playing it from 123.00 all the way down to perhaps 122.60 in the just for about 35-40 pips, depends on where exactly I get my entry trade. In the other hand, if the trade is to the upside, I'm going to be able to squeeze out or to push out my profit a little bit farther, perhaps all the way to 124.00. Okay, that's more or less the outlook of this setup from a long-term point of view. Like I said before, you always want to conduct this exercise before taking this long-term exercise before taking an intraday trade. Anyway, so course of action here. Well, I'm willing to trade either, like I said before, a continuation breakout or a reversal breakout. Let me actually compress that a little bit. If this Tokyo range breaks to the downside, obviously the problem here is that I have this round number, okay, 123.00, that kind of worked as resistance, as support. Yesterday price bottomed out, in fact, at 123.05. all right, so at any rate I have support in there in the shape of that round number, and obviously yesterday's low. So if I do get a breakout of the Tokyo range there, and obviously if I get the breakout pullback continuation pattern to the downside, I will wait for this round number to break, right, to give way to the downside in order to trigger my entry. So I'm going to probably be looking to take my entry right below that 123.00 level. All right. In the other hand, if what I do see is once the London market opens is a reversal breakout, okay. Let me actually expand that. So if what I do see once the London market opens is a breakout to the upside, well, pretty much the same thing. Okay, I will be looking for my typical breakout pullback continuation pattern in the 15 minutes time frame, and I'll be looking to cash out my trade, my profits around the 124.00 level. Again, round number, intraday resistance. We also have the previous day's high in there. Okay, so at any rate, this is the area where I would be looking to cash out my profits. Okay, so I would be riding the trade from somewhere in there all the way up to the next round number. Okay, for around maybe 40-50 pips in profit. All right. Remember, guys, this is an intraday trade. You don't want to be searching for a whole home run. If you can snatch 40-50 pips, that's already a pretty good deal for an intraday trade. So don't be over aggressive, or rather over greedy, I should say, with your intraday targets. It's best to keep it sensible, and it's best to keep it, conservative, right? So again, course of action. I am willing to take both type of breakouts here. A continuation breakout, or in the other hand, a reversal breakout. If it's a continuation breakout, I'll be looking to cash out more or less my profits at around there, where the average daily range comes by, at around 122.60, more or less. 122.70. And in the other hand, if the breakout is to the upside, I am looking to cash out my profits somewhere around there, right below the 124.00. All right. For the time being, this is waiting time. Like I say, the London market is going to open now in about 50 minutes. So I am just to sit tight, wait until the London market kicks in, see if we can get that breakout, that volatility reaction that I was talking about. If in the other hand, as you know, if price remains flat as the London market opens up, that means that, well, there is just not enough market, there is just not enough trading volume in this, in the market today. And the last thing I want to do is to get involved, to be trading a flat market, okay? You don't want to do that. You only want to take trades in lively markets, right? It's the only way to make money. If the markets remain flat and, rather volatility free, then you can't make money. You need the markets to be moving in order to profit from them. So like I say, if up on the London market I see that price simply meanders sideways for maybe 1, 2, 3 more hours, I will simply call it a day and search for trading opportunities somewhere else. All right. Anyway, like I say, for now, at this moment, it's waiting time. I will update the video once the London market kicks in. Okay? All right, guys. I'll talk to you soon. Bye-bye. Hello there, Hector again. As you can see, the London market has just opened and the market volatility is kicking in. Okay, a long red bar, long bar as the London market opens. That means that there is seems like there is enough momentum in the market today, and that's always a good thing when you are trading the London Open breakout strategy. Anyway, as we can see, the breakout is finally taking place to the downside, and therefore I am obviously I'm going to be looking for a continuation breakout, right? A short trade. Now what I'm going to do is I'm going to zoom into the 15 minutes time frame, searching for my typical breakout pullback continuation pattern, again on the 15 minutes time frame. I will keep you guys updated if I get my entry. Okay? Cheers. Hello there, Hector here. Just a quick update to let you know that I've been triggered on my trade right there. Actually, let me zoom in just in case you don't see that properly on the video. There we are. So last time I updated the video, it was somewhere around there. It was about 1 hour and 15 minutes ago to be exact, as they, as price was breaking through the lower band of the Tokyo range. Okay, if I zoom out, you will clearly see the lower band of the Tokyo range, and that was the London Open momentum I was mentioning on the previous update of this video. Right now, all I had to do from that moment on, as I saw the breakout to the downside, was to zoom into the trigger chart, which, as you know, for the London Open breakout strategy is the 15 minutes time frame. This is the 15 minutes time frame, by the way. And now all I had to do is to wait for my breakout pullback continuation pattern. Now let me zoom in once again. I want you guys to to see that clearly on your screen. So the London Open, the breakout pullback continuation pattern was triggered in there. In all honesty, I should have triggered my entry a few pips earlier, but since it was so close from this 123.00 round number, I decided to wait until that level, cleared. Got totally broken before I actually clicked on the sell button. The thing is that, as you guys know, I like to treat round numbers as kind of like intraday pivot points, right? Intraday levels of support and resistance, so to speak. And I simply preferred to wait a few pips just to make sure that that round number was certainly broken to the downside. All right, so I triggered my sell entry at 122.95. All right, so what about the stop loss? Well, as usual, the stop loss goes a few pips above the pullback aspect of this breakout pullback continuation pattern. So if this is the breakout, if this is the breakout thrust and this is the pullback, all right, this being the continuation aspect, well, that's the tip of the pullback, and that's where my stop loss goes, a few pips above that level, 123.12. Now, what about the target? Well, I think I already talked about that. I was going to stretch it all the way to 122.60. In all honesty, I could have stretched it out a few pips farther below, perhaps the 122.50. The ADR came all the way down there at 122.40, but I decided to play it conservative. There was a long-term Fibonacci retracement somewhere around there, if you remember from my previous update in this video, so I am just gonna play it safe here, and I'm just gonna shoot for the 122.60. The risk-reward ratio on this trade is rather nice. Okay, this being my entry, this being my stop loss, and this being my target. So as you can see, there is a 2-to-1 risk-reward ratio. That means that for every dollar that I risk on this trade, I am aiming, or I am shooting to make $2. A 2-to-1 risk-reward ratio is not too bad, especially from an intraday point of view. In case you guys haven't noticed yet, intraday trades usually carry a poorer or a lower risk-reward ratio than long-term trades. Okay, it's just how it goes. All right. Anyway, so just to recap real quickly: 122.95 my entry, 123.12 my stop loss right there, and 122.60 my my profit taking level for today. All right. I would say that's pretty much all for this trade. Now it's just waiting time, see whether I can make some pips today. All right, at any rate, as usual, I will keep you updated. Bye-bye. Hey guys, Hector here. Final update on this trade. My trigger has just, my target has just been hit right there. Like I said before, at 122.60. It came down actually pretty straightforward all the way from my entry in there. My stop loss was never challenged at any point. All right, it cruised all the way down to my target in there, and it didn't quite it didn't quite feel me out in there. It just came within 1 pip of my target, then it retraced back up another 20 pips, but then well, all in all, it price took another chance at the 122.60, and this time indeed it broke through and my exit was filled, and well, I'm effectively out of the market now. All right. So, well, all in all, 40 pips on this trade. Not too bad for an intraday trade. Especially what I liked was, first of all, that it was a prototypical London Open breakout continuation type of trade. The breakout taking place in the direction of the intra-week trend. If you remember, I was showing you guys a few hours ago that there was an intra-week trend, then we had the Tokyo range, and finally we had the continuation breakout to the downside. That was a prototypical continuation breakout as the London market kicked in. See that acceleration in there? All right, very typical price formation within the first 1 or 2 hours of the London session. All right, and then finally, I got my entry, and I like that. First of all, my stop loss, like I said before, it was never challenged. That usually happens when there is enough momentum in the market driving price away from the Tokyo congestion range. As the London market kicks in there, price tends to accelerate in one direction, and you manage to score easy 30, 40, 50 pips, rather pain-free. Okay, as you can see from my entry, price never came back up to challenge my stop loss. And as usual, well, not really as usual. It's not really that common on intraday trades, but I got a very nice risk-reward ratio on this specific trade. 2-to-1, that's always nice to see, and well, it's always very welcomed indeed. Anyway, guys, prototypical London Open breakout trade, like I say. I hope you enjoyed it. Do search for this type of continuation breakouts through the first hour of the London session, because you can usually score some quick profits from an intraday point of view. Cheers, bye bye.